The Bank of Canada just raised interest rates by a full 100 basis points. What does that mean for the market going forward? Well, we're going to look at three charts that will help us explain based on past market performance. Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, back with another video for you guys here today. If you're new to the channel, welcome. My name is Sam. On this channel, we like to discuss all things Toronto real estate, the GTA real estate, market stats, market trends, things buyers should know, sellers should know, building reviews, and so much more. So if you find this content informative, feel free to subscribe, comment, rate, and review. Or if you want to get in touch with me with any questions, feel free to find my contact information in the description box and on the screen. If you want, you can also Google my name for my Google reviews to do a little bit of basic due diligence before you do get in touch with me, if you wish to do so. Enough of all that important yet annoying self-promotion. Let's get to the meat and potatoes of today's video, which is off the bat, the Bank of Canada increasing interest rates by 100 basis points. Previous to this, about 48 to 72 hours before the July 13th announcement, which this is actually being recorded as of July 13th, I put up a poll on my channel asking you guys what you projected the interest rate increase to be. And most of you, along with myself as well, answered 0.75, so basically 75 basis points, because that is what the consensus was. And obviously it was also the consensus amongst my viewers and my clients as well who voted on this poll. Primarily the reason why it was a consensus that it would be 0.75 is simply because, based upon historical record, well, the Bank of Canada has almost copied and walked step by step along with the Fed in the States. So when the Fed raised it by 0.25 or 0.5, that's what the Bank of Canada did. They just pretty much copied what the Fed in the States did. Which leads us to ask, what does this mean for the market with regards to the Toronto real estate market and the GTA real estate market going forward? This will have three immediate impacts that will be very much so visible and noticeable within the Toronto real estate market. But to better understand what is going to happen, and I will get to that, let's take a look at these three charts that beautifully illustrate what has happened thus far to the Toronto/GTA real estate market. Now, this first chart beautifully illustrates something I've been discussing and going through on this channel for a while now, and showing different types of charts that pretty much get to the same point here, which is the steady drop of sales occurring. As you can see, this chart takes a look at 2022 thus far and compares it year over year with the last 3 years, 2021, 2020, and 2019. And here we see, much like the previous year in 2021, sales really peaked in March. Yet when the announcements of the first initial rate hikes came in, sales started to slowly dip. And with the sole exception of May 2020, which obviously, if you were alive in May 2020, which you should be if you're watching this and are able to, communicate with human beings, well, guess what? May 2020 was really the epicenter. The worldwide event. And at that point in time, really the housing market all around the world was put on hold because everything was just so new with the worldwide event. The special case of April 2020 and May 2020 put aside, we see thus far that with regards to 2022 sales, guess what? April, May, and June are performing far less than the three preceding years, once again with the sole exception of April and May 2020. But sales in of itself does not indicate a buyer's market, which I have called for a long time. Go watch that video where I was one of the first, maybe call it a little bit early, but nonetheless call it. We have to take a look at sales relative to the total number of new listings. And here with this next chart, we see, guess what? Listings are moving in the opposite direction sales are moving at. Now, in the beginning of 2022, when it was very much so a hot, vibrant seller's market, listings were very, very low. This was essentially a shortage of inventory in the face of an excess of demand, causing prices to rocket up, competition to rocket up, multiple offers, buyers submitting 8 to 11 offers, 8 to 11 offers on a single offer night, creating a very hot, vibrant market. But into March, we see that listings finally caught up in 2022. And guess what? Since March 2022, new listings, properties coming onto the market on a monthly basis have only dropped by a marginal amount. Now you may say, well, the same things happened in 2021 according to this chart. Sales were very low in the beginning of 2021. Into March, April, and May, they started to dip, and into June as well. Well, this is where we kind of combine the two charts and see that it's not really the same whatsoever, because we're going to take a look at this next chart, the sales to listing ratio. And this is really the perfect conjunction of the first two charts. Guess what? The sales to listing ratio was very high. Of all the available properties on the market, a lot of them, 65 to 70% of them, were selling. Yet after the first initial hikes into March, April, May, and now into June, that sales to listing ratio is dropping at a aggressive rate. Whereas the last 3 years really do not follow this trend, because guess what? Once again, in the last 3 years, rates were much lower. It was a much more seller-friendly market. Of course, there's exceptions here and there, right? Once again, the start of the worldwide event put a pause on things for a short bit. Nonetheless, we do not see sales to listing ratios decline. In fact, we see it improve and increase towards the end of each year, 2021, 2020, and 2019. Now, having taken a look at what has happened thus far, and I'm not just purely going based upon the charts, the numbers, the graphs that I like to talk about and present to you on this channel, I am also going based upon my daily experience as a real estate agent working with buyers and sellers. If you have any further questions, by the way, my contact information in terms of office address, email, and where you can get in touch with me is in the description and on the screen. Nonetheless, going based upon my experience as well, in conjunction with these charts, we can safely come to a conclusion of what has happened thus far as a result of the interest rate hikes, and with this 1% rate hike announced today, what will most likely happen going forward. First of which will be a diminishment of demand. That's right, a further diminishment of demand. This 100 basis point increase that was announced today will most likely eliminate a good portion of buyers from the market, and the remaining portion of the buyers who are actively in the market, who are being somewhat, in my opinion, opportunistic, because I do believe it is much better to buy at higher rates with lower prices as opposed to higher prices, lower rates. Nonetheless, the remaining portion of the buyers, well, guess what? They're not going to be eliminated from the market, but their borrowing power will be reduced to varying degrees, obviously, but nonetheless reduced. So this will implement a ceiling on the borrowing power of a lot of buyers, and as a result, it will impact demand in a diminishing way. What will be the consequence of this? Well, guess what? We're going to see, in my opinion, even a lower, and this is where we segue into the second consequence, the second outcome that I think will be somewhat immediate, which will be even a lower sales to listing ratio. Now, the only exception to this will be in the event where a lot of sellers remove themselves from the market as well. In my experience, sellers are not that quick to adjust to market conditions. Usually buyers adjust to market conditions much faster than sellers. Of course, that is a general statement. There are exceptions on both sides, but generally speaking, from my experience, sellers are not that quick to adjust. So that caveat and exception aside, I do believe is a fair projection to say that as a result of this 1% rate hike, it's going to be less sales. I don't believe inventories will slow down. They might plateau, but I don't think inventory is going to dip. As a result, we're going to see even a further fall of the sales to listing ratio. Lastly, the third major consequence of this that I think will be immediate will be the fact that a lot of more people will shift towards the rental market. I do believe the rental market will continue to stay as hot as it has been as a result of the very same factors, and furthermore, potentially actually get even a little bit more competitive. And I've seen a lot of my clients express concern, even as of this morning, with this 100 basis point increase. And it's very natural if you're a current seller or homeowner on the market, it's very natural for you to feel concerned, especially depending on what kind of mortgage you have. Nonetheless, it's not all doom and gloom, and I do think a lot of things are sensationalized. I think there is a nuanced perspective to be had. I do believe a major correction has occurred, as I have established in my videos thus far. I do not believe a crash has occurred. I do not believe a crash will occur. I do believe prices will continue to come down. The market will get even less competitive. If you are a homeowner in today's market, though, and you're concerned, You should only be concerned if you had a plan to sell in terms of a year-long flip or a year-and-a-half long flip. If you are a long in this market, in my professional opinion, there is very little to worry about, with the sole exception of your monthly going up. But nonetheless, especially if you're an end user long in this market, once again, I don't think in the 5-year timeline or even the 3 to 5 year timeline, you have much to be concerned about. Thank you very much for watching this video. Let me know if you found it informative. Feel free to subscribe, comment, rate, and review. If you have any further questions, feel free to get in touch with me with my contact information in the description box and most likely on the screen. Thank you very much for watching. Stay safe and stay tuned.